Welcome everybody to Xaar's 2021 full year results. My name is John Mills, the CEO of Xaar, and I'm joined today by our CFO, Ian Tickius. We are delighted to be here today to present the 2021 full year results, and today we will tell you about the excellent progress we have made against our strategic plan and to update you on why we remain so excited about the future of Xaar. But before we start, I want to reflect on the very different position we were in 2 years ago. Xaar had been through a period of decline from the peak in 2013. In March 2020, the share price had dropped to 18 pence and our market cap was less than £20 million, having posted losses of £70 million. We had just closed the thin film business and nearly all our customers had abandoned our core bulk technology in favour of our competitors. And it was unclear what core value still existed in the company. But what did exist was a great team of people and a world-leading printhead technology. And with these two assets, we were able to refocus the business into markets where we have a clear technical advantage. We restructured and rebranded, allowing us to energise the team and re-engage with customers. We defined a new business model, delivered new products, won back old customers and won new customers. We updated our infrastructure and further strengthened the team, our product and our capabilities to deliver growth in the business. And I'm delighted to be here today to update you on the progress we have made on our journey. In today's presentation, we want to do three things. First, tell you about the good set of results we have just posted. Second, demonstrate that we are on track with our strategy. And third, to tell you that we remain excited about the future of Xaar and what that holds. So, to start, let's begin with the results for 2021. We have delivered a good set of financial results and passed the key milestone of delivering a profit in H2 2021. This demonstrates that we are ahead of plan and doing well on our journey. Customer engagement has increased and we have regained market share in ceramics and developed multiple new markets, which gives the business added resilience and strong revenue growth. The last time we spoke, I mentioned the risk to our supply chain, given the global shortage of silicon chips. Since then, we have worked hard to secure supply and have increased inventory and finished goods to minimise the risk of shortages in the future. We have fulfilled all customer orders and are in a strong position going into 2022. The disposal of Xaar 3D has enabled us to make the acquisitions of FFEI and more recently Megnajet, whilst also retaining a strong balance sheet. We have a new management team and strategy at EPS, and the changes we have made puts us in a good position to grow revenue and return to profit in 2022. All this means we have made a strong financial progress and are particularly pleased to report a group profit in H2 2021. With that, I'll hand you over to Ian, who will take you through the financial results in more detail.
Thank you, John. So, as John said, we've finished the year well and delivered a good set of results. This is characterised by a number of strong metrics. We have delivered double-digit growth with revenue up 12%. Our gross margin has grown to 34%. And most importantly of all is that for the first time in several years, H2 has delivered a profit. So, as you can see, we get really pleased with our progress and the performance of this year. So with that, let's start by looking at a summary of the group financial performance. This slide clearly demonstrates the three key points that I just spoke about. We've delivered strong revenue growth across the group. This is a 12% increase on a like-for-like basis, excluding FFEI, and critically is in each of our business units. There's been good growth in gross margin, which is 7 percentage points higher, due to the operational leverage in the printhead business and an increase in volumes. And this demonstrates the continued momentum in printhead, with customers re-engaging with the business and the success of new applications that we are delivering. We are very pleased to report a healthy positive EBITDA of £3.2 million. We're particularly pleased because it's driven by both our printhead business and a positive contribution from our EPS business. Moving on to total operations, This includes results from discontinued operations, which is a tidy up of the legacy thin film business, but more significantly reflects the sale of the remaining option that we have in Xaar 3D to Stratasys. So there is a benefit to our total profit after tax of £17 million. From a balance sheet perspective, working capital has increased by £5 million. That's principally due to the proactive investment we have made in our inventory, which includes investing in raw materials, holding higher stocks of finished goods. We did this to mitigate any further supply chain risks, and it allows us to feel comfortable that we can meet all our customer demands for the year. This means that we finish the year with a strong cash position of over £25 million, a strong balance sheet, and we carry no debt. So all in all, I'm really pleased with the performance that we have delivered and the progress that we have made over the last period. Now let's turn to look at these elements in more detail, starting with revenue. As you can see from this slide, group revenue continues to grow. This is a theme that is really coming through as you look across all areas of the business. Starting with Printhead. Revenue has consistently grown in the year, although levelling slightly in H2. This is due to some orders slipping out of 2021 and into 22, and it's a reflection of the effects of COVID. But we know these orders are solid and they will come through in 2022 and accordingly will result in a benefit during the year. The positive point I want to stress is the continued increase that we are seeing in ceramics and glass. If you remember, this used to be a very strong area, but we subsequently suffered significant losses. Our hard work is now paying off, and we are now seeing great progress as we rebuild those relationships and regain market share. We're also pleased with the progress in EPS. This is the third reporting period in a row in which we see solid growth. This reflects our strategy, focusing on product modularity and offering complete print solutions. And you can see that's really starting to pay back and deliver a strong performance. Finally, by region, we are really pleased with the progress that we are making in Asia, which sees a 20% increase for the second year in a row. And much like ceramics and glass, it's yet another great example of the work that we have done to rebuild our customer base. It's a critical market for inkjet, so it's testament to the good work we are doing in this region. So again, a great demonstration of the growth we are delivering year on year and in line with our plan. Now let's turn to look at each of the business units in more detail, starting with Printhead. Our Printhead business continues to improve, and that's across both revenue and margin. Revenue is up 14% as customers re-engage, and we have won more business due to the competitive advantage of our market-leading products. We've delivered an increase in both profit and margin, and that's due to the uplift in volumes that we are putting through our factory and demonstrates the strong P&L leverage that we have. OPEX is higher year on year, and you remember that this is partly due to some one-off credits that were received in 2020. So the variance you see here is overly inflated by approximately £1 million in comparison to the real year-on-year movement. That being said, we have increased spend across the business. To ensure that we are positioned to perform in line with our ambitions, we've chosen to invest in our operational capabilities, in our infrastructure, and particularly in IT. In addition, we will continue to invest in R&D and our ImagineX platform, which will deliver further product developments. And you'll hear more about this from John in the following slides. And finally, we are pleased to report strong EBITDA of £2.8 million, which is a much improved in comparison to last year. So again, a good performance from Printhead across the business, which is on track to deliver in line with our ambitions. Moving on to EPS. We've delivered strong revenue performance with a 9% increase year on year. And as we saw from the earlier revenue chart, that's reflected in a good recovery in our digital machine sales and positive momentum in our revenue growth. We have reported a gross margin of 23%. Now, that's a result of the one-off write-downs that we spoke about in our half-year results. It reflects the actions we have taken with our new strategy to align EPS for the future of the business. It's a demonstration of our philosophy to deal with any challenges across the group in an efficient manner. That work's now done, and we look forward to the positive performance it will deliver. On an underlying gross margin basis, we have delivered 27%. And whilst we reported a write-off of 0.6 million, we maintain it was the correct action to take. It gets the business back into shape so we can grow it in line with our strategy. It's important to note that despite these actions, we've delivered a positive EBITDA from an underlying performance perspective for the year. And essentially what we have here is a business unit that is stabilised, delivering revenue growth with a balance sheet that's strong and is now fit for our ambitions and strategy for the future. Moving on to FFEI, which we acquired in July 2021. We're really pleased with the work that's been done to integrate the business as fast as we have. We are excited about how this will help our overall group strategy for vertically integrated products, which is driving the performance for the future. Instead of just being a printhead supplier, FFEI helps us expand our customer offering. We think of FFEI as a development centre where we plan on investing heavily in R&D to deliver other products for our vertical integration strategy. And again, you'll hear more from John on this later. Finally, finishing with our operating cash flow breakdown. What's important to understand is that we have strengthened our cash position and balance sheet. Looking at this chart, it's demonstrated by the first green bar showing the positive cash generation across the business of £3.2 million. We've been strategic in the restructuring and investment decisions we have made, and this year spent £1.4 million in acquisition and reorganisation activities, which in time will lead us to generating increased operating cash. And you can see how that focus has also come through in how we have managed our working capital, where outflows were just over £3 million in total. We have generated £4 million through actions we have taken with our non-inventory working capital, and we've invested over £7 million in our printhead inventory. That's in raw materials to mitigate any supply chain issues, and also involves increasing our stock of finished goods. This puts us in a good position to more efficiently manage our customer demands while mitigating any potential risks. We've been meticulous with our CapEx, having only spent 1.7 million in the year. That number will go up in future years, but for now, we are making sure that we are concentrating on the right parts of the business, and for the moment, that needs to be in our working capital. And finally, on the right-hand side of the chart, you see the £9.3 million, which is as a result of the sale of Xaar 3D to Stratasys. So, to bring it all together, we have ended the year with a strong cash balance of over 25 million in the bank. We still carry no debt, and this allows us for better options to invest within the group, which is what we will continue to do. This year we have taken a proactive decision to invest the sum of £7 million in our inventory, insulating us against any future risks within the wider supply chain that many other sectors are facing. All in all, it's a strong performance that leaves us with a healthy balance sheet and puts us in a good position for the future and in line with our strategy. So, to summarise, as I have said, we are really pleased with the work that we have done over this period. We have returned to profitability in the second half of the year, driven by strong revenue growth and with cash generation. By investing in inventory, we have mitigated as much as possible any future supply chain issues, which, given the ongoing disruption across many businesses and sectors, is a very positive position to be in. We have a well-invested business and balance sheet, and all of this provides us with a stable platform for our strategy and to drive our future growth ambitions. And that brings us on nicely to the outlook for the year. We anticipate further good organic revenue growth. This is evidenced by the momentum in printhead sales through Q1 this year. On top of that, we expect an improved gross margin. This will come from the continued efficiency gains we have in the business. And whilst that enhancement won't be at the same incremental increase as for 2021, we are confident of returning to 40% gross margins in the medium term. Of course, COVID-19 continues to be a risk to economic disruption, particularly so in Asia. But we have made a strong start to the year, and we are on track to return the business to profitable growth. We have the right strategy, and we remain confident in our ability to achieve our target of a full year profit this year. Thank you, and now let me hand you back over to John, who will expand on those ambitions.
I mentioned earlier that we have worked hard to win back our customers and engage our people. To bring this to life, I want to share a brief video with you to show how we've reinvented and rebranded ourselves in the eyes of our customers. This is the latest in our strategy to communicate the value proposition of Azar, and it really reflects the character and direction of travel we have as a business. Here you can see our renewed approach and how we have reset the business model to increase our customer engagement. Azar's primary goal is clear: to sell more printheads. But to do this, we need to do two things: extend our product range so that we can compete in all market sectors, and supply our customers with the other critical components required to develop a digital printer. And supporting all this, we need to ensure that our customers understand what Azar has to offer and why it is the right choice for them. Our main objective was to be clear on who we are, what we have to offer, and how we do business. And I want to share with you how we have achieved this. We have been very clear that Azar only sells printheads that we design, develop and manufacture, and that we will not sell through any competing channels. Our focus is to partner with our customers and to offer them the products and support they need to be successful. This approach is working, and we are successfully rebuilding a level of trust and respect across all customer segments. And whilst it's important to communicate, it's also important to listen, as our customers require different levels of support, which can be illustrated on the right. Experienced OEMs who develop full digital printers to sell into different applications often only need printheads, and occasionally other subsystem components, as they typically already have these. On the other hand, there are the UDI customers. These are companies who may want to incorporate digital print into an existing process or manufacturing line. They will have significantly less experience than an OEM and require a higher level of support and more integrated system components. Our focused and flexible approach allows us to meet both customer requirements and become a critical part of their value chain. And this further provides opportunity, as you can see on the next slide. As we look with a clearer focus at the customer landscape, there is even more that we can do. We have made good steps in re-establishing Azar's credibility and brand with our business model. But in order to sell more printheads, we need to extend the range of products to access all digital print markets. So what have we done to address that? Well, in 2020, we launched the ImagineX platform. This is a portfolio of IP from 3 different sources. The first is deep knowledge generated from the £70 million investment made in thin film over the previous 10 years. The second is the development of our bulk technology that was not commercialised due to the focus in thin film. And finally, IP acquired from third parties. The ImagineX platform gives us the capabilities to produce printheads with increased speed, increased resolution, and a wider range of ink types. It is the foundation of our product roadmap and gives confidence that we will successfully deliver a range of new products, as you can see on the next slide. The featured technologies you can see in the top half of the chart have all been delivered on time, on budget, and with clear benefits to the business. This reinforces our belief that the technologies that we have in development, from aqueous compatibility down to high resolution, will also be delivered on time and on budget, and will have a clear benefit to the business, and will also enhance the product offering. Now, I'm conscious that the technologies we have discussed may be a little abstract, so let me connect it together with some examples. Here you can see 3 new products that we have delivered, all using technologies shown on the previous slide. In ceramics and glass, we have the ZAR 2002. This product was fundamental in winning back customers and regaining market share in ceramics, which had always been a strong market for us. Next is ZAR Irix. The increased throw distance has enabled us to retain and grow our position in the secondary packaging market. And finally, ZAR Nitrox. This product's increased speed, along with the ability to print a wide range of fluids, has driven significant adoption in 3D and advanced manufacturing. These markets are core to our offering, and we are on the journey of regaining market share. Looking forward, we are really excited about the launch of our Aqueous product. This will be the first water-based version of ZAR's bulk printhead technology and will be a transformational product, not only in performance, but also from an environmental perspective. Combining high viscosity with the ability to print water-based fluids will give a significant advantage in a number of market sectors. It's really exciting for us, as this technology has the potential to have a significant positive impact on sustainability across a number of markets and applications. Let me give you a few examples. Firstly, we are able to reduce the amount of water in the ink. This means that the drying process becomes much quicker, so you can print faster and spend less energy on the drying process. For the customer, this delivers up to 50% reduction in energy consumption. And if you can imagine the amount of water-based inkjet printing around the world, this has the potential for a large positive environmental impact. Another example is that today, the vast majority of ceramic factories use oil-based inks. When the tiles are fired, this creates pollution. Transitioning to a water-based ceramics ink can significantly reduce the impact of the process. There are many other examples of the positive impact Aqueous will have, and I really look forward to telling you more about this in due course. Finally, the biggest single industrial print market is wide format graphics. To be clear, this is any large graphic that you might find in a supermarket or retail store, and a truly global opportunity. We do not currently operate in this market, however, our technologies are well placed to address it. In the first half of 2024, we will be delivering a product with higher resolution, higher speed, and a more robust nozzle plate. And along with the through flow and high viscosity capabilities, will give ZAR a very competitive product in this market. And as shown on the previous page, we are very confident in our ability to deliver on time and on budget. So, going back to our model as a reminder, we want to sell more printheads, and you can see we have a clear plan to access all digital print markets. But in parallel, we have been working on the supply of supporting system components. If an experienced customer decides to adopt ZAR printheads for their digital printer, it can take them 3 to 5 years to develop a product. Even experienced customers can take several years to develop a new printer, as changing printhead manufacturer has also a knock-on effect to many of the system components. For customers to adopt ZAR printheads, they need to understand the value proposition, but they also need to access the system components that shorten the development time to bring the product to market. But what are these system components? Here is a typical printer. It has a transport system that moves the object being printed under the print engine. This could be a roll of paper or card, individual sheets of plastic, metal, or more complex items. The print engine delivers the digital print on the product as it passes under the print engine. We do not provide transport systems, as these are bespoke to the application. Our OEM customers build both the transport system and the print engine as part of a standalone printer that they sell. Our UDI customers develop a print engine and integrate it into their existing production line. The UDI's production line is the transport system. Now, all digital printers, regardless of size and application, have the same configuration, and we aim to offer whatever level of integrated solution our customers need. This could be the whole print engine, or the print bar, with or without the ink system, or just the print heads for the customer to use in their own print bars. We want to offer a one-stop shop to enable our customers to seize the inkjet opportunity. To enable this, we have made 2 strategic acquisitions that offer class-leading system components to our customers. Firstly, we completed the acquisition of FFEI, who have been developing inkjet systems using Xaar print heads for the past 15 years and already have print engine and print bar products in the market. The integration of FFEI has gone well, and building on their existing technology, we are launching a range of print bars under the Versatech brand through 2022 and 2023, with the first product launched earlier this month. We are also really pleased to have acquired Megnajet, who are one of the leading providers of inkjet delivery systems. We plan to build on their existing product range and deliver ink systems that meet our customers' needs across a variety of ink types and printer sizes. We've also formed strategic partnerships to be able to offer a range of Xaar branded inks along with electronics and datapath. Completing the offering is our range of print heads and technical support, and the ability to offer these system components reduces the barrier to adoption, reduces product development time, and makes adopting Xaar print heads a more attractive option for our customers. There is also revenue upside and margin to be gained from this vertical integration strategy through the sale of system components and ongoing ink supply. The rebranding of Xaar has given us the opportunity to redefine the business model, but it also has given us the platform to deliver a very clear value proposition for our technology in each of the target markets. Through clear messaging, we have managed to re-establish the key USPs of our Xaar technology in a way that differentiates us from all our competitors. The ability to print highly viscous and highly pigmented fluids is a real differentiator in the market and is one of the key technical reasons why Xaar is winning new business. And what's really exciting is that we are starting to see companies reformulate their fluids to take advantage of the functionality we can offer. The rebranding and digital marketing campaigns that we have undertaken over the last 2 years have significantly increased our profile, evidenced in the number of followers, website traffic, and leads that have been generated. And in line with our rebranding campaign, we have also substantially increased our focus on our ESG, and I will cover this in the next slide. When it comes to printing, digital is inherently more sustainable compared to traditional analog printing. It has a much smaller carbon footprint because it reduces and prevents excessive waste due to the ability to print short runs or direct to shape. Xaar print heads are capable of printing highly viscous fluids, reducing the need for energy-intensive drying processes. We are passionate about this and the environmental benefit our products can bring to customers. We have established an ESG committee to deliver our sustainability roadmap with an overall goal to be net zero by 2030. This is built on 4 pillars you can see on the left: environment, people, innovation, and community. And you can find more information on this roadmap on our website. Over the last 2 years, we have worked hard to ensure that the business is able to support profitable growth. We have made operational improvements to deliver products with the right volume, quality, and cost to meet demand. We have also overhauled our IT systems and made significant step forward in improving operational efficiency. In addition, we have started to grow our regional support capability, as this is key to assisting our growing customer base. I'm also delighted that we've been able to attract and build a world-class leadership team across all functions of the business, giving confidence that we have the right business model, technology, and the right people to take the business forward. What all of this means is that we have completed the recovery and stabilisation phase of our journey, and our focus now is profitable growth. As you've heard me say before, we have a large market, great people, great products, and we will be successful. So now, I want to share a bit more with you about what's driving our confidence for the future of Xaar and the significant market opportunity for printheads. But to put this in context, we need to briefly rewind in time. In 2013, Xaar had 100% market share of the ceramics business globally. By 2018, it had lost all that market share due to a range of factors which we have now addressed. As I speak to you today, we have regained 10% of that market share and expect this to grow over the coming years. Of course, it is difficult to predict what our market share will be in each of the other sectors, but with the right products, which we have and are developing, we will become a significant player again. Our new business model, product roadmap, and value proposition have already had a very positive impact on our customer engagement. But as I've highlighted, it can take several years from adoption of Xaar technology before seeing significant revenues. For this reason, a metric we use to measure the progress is the pipeline of opportunities. As you can see, in 2019, there were only 2 new product launches using Xaar printheads, and only 3 customers who were actively developing a product with us. And over the entire year, only 8 companies expressed a qualified interest. And that pipeline has now grown significantly. And in 2021, there were 12 new products, in which will drive increased volume in 2022, along with volume growth of products launched in 2020 and 2019. The growth we see in the pipeline is based on us having the right products in 3 of the major markets. And as we launch Aqueous and re-enter the large format graphics market, we should see an acceleration in the growth of the pipeline, with revenue growth following 1 to 3 years behind. So, a very exciting pipeline, giving us visibility for the future. Let me finish by giving you an outlook on the medium term. While there is a huge future opportunity, we are very much focused on delivering in 2022. We have made a strong start to the year, and we are on track to return the business to profitable growth. Of course, COVID-19 continues to be a risk to economic disruption, particularly in Asia. And whilst we have no direct exposure to the region, none of us yet fully understand the global economic impact from the terrible conflict in Ukraine. However, we are confident that our strategy is the right one, and it is working in the face of these challenges. We will continue to focus on the things that we can control, and we look forward to the launch of our Aqueous product later this year. We will continue to build the pipeline of opportunity with the product range we have today, and we will continue to focus on delivering internal efficiencies to improve overall margins. So with that, let me finish as I began, by again emphasising that the business is on track and the recovery phase is now complete. We have reached the key milestone of returning the business to profitability in H2 of 2021, and we are in good shape to take the business forward. With our 2 acquisitions and 3 new products, we are ready to address the significant market opportunity in front of us. So, a good set of results and an exciting future, which is why I make the statement we have a great technology, great people and a large market opportunity, and we will be successful. And with that, we're very happy to take any questions you may have.